Hello everyone, Kolonji Murray with TaxAssurances. Just wanted to put this video together for people that are debating whether or not it makes more sense to take the standard deduction or the itemized deduction when it comes to preparing their taxes every year. So every year, obviously as a tax preparer, I come across this debate with every single client that I come across, whether or not they should take us, like I said, the itemized deduction or the standard deduction. Now, there were some changes in 2017 that made it so that most people, like 70–80% of the people that are out there preparing their taxes are taking what is called the standard deduction. So there are different numbers depending on what your filing status is in terms of what you can take for the standard deduction. So for instance, like if you file single, meaning it's just you, there's nobody else, you don't have any dependents or anything like that, that's going to have a certain standard tax rate, tax deduction. And that is something that is adjusted by the IRS every year. If, for instance, you are single, unmarried, however, you do have a dependent of some sort, so whether that's a child or whether it's an adult that you're taking care of, you're providing, most, if not all of their financial support, then you're filing head of household. That filing status is going to have its own standard deduction number. And then finally, if you are married and you're filing jointly, then that's a situation where you're going to have its own standard tax rate, standard deduction rate. So that's how it kind of plays out. Like I said, most of the time, 70–80% of the tax filers at this point are using the standard deduction as their deduction. However, there are people that are still able to take the itemized deduction. What are they deducting? Well, it's a couple of things. The first and the biggest one, and the most prominent one, is the mortgage interest that they're paying on their home. So obviously they're going to own the home, and every year they're going to get a summary of how much they paid in interest on the loan for that home. So we're going to add that in there first. The second piece, which is kind of the other large piece in this calculation, is the property tax. However, it is worth noting, and this was part of kind of the change that happened in, I believe, 2017, 2018, is there was a cap that was put on how much you can deduct for property taxes. So say, for instance, in New York, where I typically come across someone who's got, I don't know, 10, or not even 10, 15, 20, 30, 40, $50,000 worth of property taxes. The only amount, or the cap amount, that they can deduct in property taxes is the $10,000. So that definitely hurt a number of people, but they still, get something. It's just not as much as it was before. So that's another piece of information that we're including with this calculation. Then, not as frequently, you've got charitable donations. So people are giving to various charities, whether it's Goodwill, whether it's the Red Cross, whether it's Doctors Without Borders, any number of churches, synagogues, mosques, other charitable organizations where people are giving money, and we are able to take that as a deduction. So that's another big piece that we're going to look at. Then, not as frequently, however, it does happen periodically. I come across people that have large out-of-pocket medical expenses, meaning, yes, they have had, unfortunately, a lot of medical expenses, and more unfortunately is their insurance company is not covering the cost of that care. So because of the fact that they have to pay it out of pocket, the government does provide, in certain cases, a deduction for that. However, even that has its own challenge. There's a certain threshold in terms of income, and I don't want to bore you with the calculations, but there is a calculation to determine, even with those medical expenses, how much of those medical expenses can be deducted on the itemized deduction. So that's another piece. And then there's some others, not as frequently used, as like casualty, theft and loss, and a number of others that on an individual basis I can kind of go over with you. But those are kind of the big categories. So what happens in this process in determining whether or not you take the standard deduction or the itemized deduction is this. So let's say, for instance, you are filing single, and let's say, for instance, you've got a certain number for that. For argument's sake, let's say it's, I don't know, $14,000. Again, every year the IRS changes it, and it goes up slightly every year. But I'll just use this 14,000 as an example. So let's say if you're filing single, your standard deduction is 14,000. What that means is, between your property taxes, which again cap out at $10,000, the mortgage interest, the charitable donations, if you've got medical expenses, all of those expenses combined would have to be more than the $14,000 for it to make sense for you to take the itemized deduction. So that's kind of what that analysis is going to look like. Obviously, again, if you're head of household, if you are married filing jointly, it's still analysis depending on what those numbers are. Again, head of household and married filing jointly do have higher standard deductions, but again, we're still looking at in apples to apples comparison, making sure that if you've got these other itemized deductions, if it does become more than that standard deduction, then we can and should take that deduction. But if not, we'll take the standard deduction. And that's, again, that cap on that property tax in particular. That is what kind of drove most people at this point to taking the standard deduction. But more importantly is still doing the analysis. Give me, as the tax preparer, as much information as possible related to the property taxes, related to the mortgage interest, related to charitable donations, related to any medical expenses. Let me determine ultimately if it's more advantageous to take the standard deduction or the itemized deduction, and we can go over it. But at least I have the information to help us make an informed decision on what's best for the tax season. Obviously, if you've got more questions related to standard deduction, itemized deduction, you can reach out. And obviously, if you've got questions with other tax-related matters, by all means, you can reach out as well. Until then, talk to you soon.